Welcome back. You're watching Markets at Noon on ET now. Let's get you an exclusive interaction with Aditya Birla Sun Life AMC's A. Balasubramanian and Mahesh Patil on their outlook for 2020.
I think 2020, purely on the basis of what we have seen in 2019, on the back of what has happened and then how it's emerging in terms of bringing structural reforms in the country. And secondly, having now recognized that there is a slowdown, that a lot to be done in order to get the economy back to normal, with the effort that is being put by the government and then the representative that has gone from the industry players. And if we combine everything and put together and see, I think 2020 probably could be a good year of consolidation with upward bias. And also I think our belief is it will get huge support from the broad economic point of view on two counts. One, of course, interest rate being low and liquidity being high. And second is the output that could come from the rural economy in form of better agriculture output should also, I think, revive the consumption demand from coming from the rural economy. I think if you look at from all angles, I think 2020 should be a year of consolidation with upward bias.
Mahesh, coming to you on equity investments in particular, last couple of years we have seen a huge polarized market wherein a select number of stocks have driven just the Nifty above or to lifetime high levels, but the broader markets, those have been under pressure. Do you see that changing in 2020?
Yeah, so if you look at last 2 years, we have seen, because of the economic slowdown and because of the stress in the financial markets, the NBFC crisis, there was a severe risk aversion which was there. And that meant that money moved only into the few companies, where there was earnings visibility and were performing. And the breadth of the market really collapsed. As we move forward in this calendar year, we've seen that the overall economic growth has kind of starting to look up, though it will be slow and gradual recovery. And with that, whenever that happens, we see that the mid and small cap sector, which is more linked to the domestic economy, where the earnings growth will slowly start to improve over there. Also, the crisis in the financial markets, I think we are looking at things stabilizing over there. And while we don't see immediate risk appetite coming back, but that stability means that people will start to take incremental risk over there. And overall global risk appetite is also looking better. We're seeing global growth coming back. So given these factors and the fact that the underperformance relative in the last 2 years means that the relative attractiveness of some of the broader market vis-a-vis the top companies has improved. So that leads us to believe that there could be some mean reversion this year. And it will happen slowly and gradually. The larger companies will continue to hold on. We don't see the quality plays really coming down, but they'll probably consolidate a moderate return, and the breadth of the market will slowly start to improve across within the large cap also, and then percolating down to into mid cap and select small caps.
Right, so follow-up question on that would be, how does one play this recovery that is expected in the markets? Do you anticipate that this is going to be broad-based, sector-specific or stock-specific?
So I think the polarization has been there in sectors as well as in the stocks. So within the sectors, we think that some of the sectors which have got hurt in the last calendar year because of the slowdown will see a recovery, and there could be some re-rating potential over there, not only in the earnings but also in terms of the multiples which have got derated compared to the long-term averages. So some of the domestic cyclicals, especially in the corporate banks, for example, low-ticket consumer discretionary, where we would see them improving going forward. And within defensive also sectors like pharma, for example, which has seen significant derating of multiple. We think we are looking at things stabilizing here on the US side, and earnings growth over the next couple of years.
Okay, with that, we'll wrap it up on this edition of Markets at Noon. Many thanks for watching.